Hi guys, welcome back with me. Don't forget to like, comment, share, and subscribe this channel. China's yuan leads Asia FX losses on Sanctions report US CPI woes by Amber Warwick. Investing.com, China's yuan fell the most among ASEAN currencies on Wednesday following a report that the US was considering sanctions against Beijing to deter an invasion of Taiwan, with regional units also pressured by higher than expected US inflation data. The yuan sank 0.7%, coming close to a two-year low, while most other ASEAN currencies were pressured by a stronger dollar and growing expectation of more sharp monetary policy tightening by the Federal Reserve. The Taiwan dollar also shed 0.7% suggested that the US was considering sanctions against China to deter it from invading Taiwan, with Taipei also pressuring the European Union to do the same. While the discussions are still at an early stage, any new sanctions against China threaten to severely then relations between Beijing and the West. Sanctions against China would also be devastating for global trade, given the country's key role in the supply chain for several industries. Tensions between the US and China are already heightened this year after several US diplomats visit Taiwan, which Beijing claims is part of its territory. Broader ASEAN currencies returned as the dollar surged to near 20-year peaks after the US inflation reading. SPI data showed that US inflation is not cooling as quickly as initially thought, putting more pressure on the Fed to keep hiking interest rates. Both the dollar index and dollar index futures traded sideways on Wednesday after stellar gains in the prior session. The Japanese yen was among the worst hit by the inflation reading, slumping over 1 point on Thursday and coming close to 24-year lows. The currency is among the worst performing ASEAN units this year due to a growing rift in interest rates, while Japanese ministers have said they will look to curb the yen's losses. No clear measures have been undertaken so far. ASEAN currencies have fallen sharply this year, as a series of interest rate hikes by the Fed drove capital. The US dollar strengthened in early European trade Friday, while the Chinese yuan broke off a crucial threshold as concern over rising interest rate and a potential recession then risk of height, which tracked the greenback against a basket of six other currencies, trade 0.1% higher to 109, not far removed from its two-decade peak of 110.79. Both the World Bank and the International Monetary Fund warned last Thursday of an impending global economic slowdown, with Inder Gill, the World Bank's chief economist, saying he was concerned about generalized stagflation, a period of low growth and high inflation. Fears of a global recession are growing, with many central banks aggressively tightening monetary policy to combat inflation at historic levels. The Federal Reserve is widely expected to hike by 75 basis points next week, and the Bank of Ireland is seen as likely to increase its interest rates for the seventh meeting in a row. Maybe that's all from me. Thank you for watching. Don't forget to like, comment, share, and subscribe this channel.